General Electric has reported second quarter earnings of 51 cents a share, excluding various items, up 64.5% against the same quarter in 2015, despite a weak global economy. At 51 cents a share, it was the best EPS gain since the first quarter of 2011, beating estimates by 5 cents a share. Additionally, it was also the best sales increase in a number of years for the group as a whole. Revenue was seen climbing 8.3% to $31.75 billion. But, and this is the big key that has really affected shares today, critical factor, industrial organic revenue down 1% to 24.4 billion, and that was below some estimates. Orders falling 2% as well to $12.9 billion. So put all these together and you get a stock reaction which is negative. Josh joins us now with some more analysis of what's going on and how to trade the share. Josh.
Yeah, exactly. I mean, ultimately, there's one direction it's moved in terms of price action, and that's down. So, you know, the markets don't necessarily like the numbers. I wanted to paint a picture from a longer term perspective, bring it in. This is the monthly time frame. What we can see here is essentially that we did manage to break through this previous resistance trend line, found resistance on it, then found support. That is quite bullish. Nevertheless, the longer term picture, we remain within the creation of lower highs, lower lows, and we've now come into this 76.4 Fibonacci retracement. Take it into the weekly time frame, you can now see that we've also reached this big trendline resistance. Now, yes, it did fleetingly pass this, but certainly if you look at pretty much 2016 so far, it has been characterized by this sort of waved pattern where every time we get a rally, we seem to surpass the previous high, but then we get a sell-off and a pretty deep retracement. That gives me the idea that actually we're seeing that now. I think we're likely to set ourselves back onto a bearish path for the short term, off the back of these numbers today. The daily time frame shows you exactly that. So we're going to be looking towards some of these Fibonacci's made of 61.8 at 30.68, or the 76.4, which is my favorite Fibonacci level, around about $30. So I do think this marks the top for this market. It's come into trendline resistance, tried to sustain price above it, and now it's been pushed lower. I think this is the beginning of a sell-off that will probably last the next week or two.